and going into a holiday weekend. Let's get started here with the USD CHF dollar franc. We're looking at the daily time frame. Of course, over the past couple of weeks, we saw a pretty decent fall for this currency pair. After news out of the ECB and the Fed, we saw a decent move all the way back down here into the 9600s. The move all the way down here towards the blue shaded area is 9650. We've seen a couple of times tapping down there into support. Over the past 5-6 days or so, we've seen our bounce off of that support and a move back higher. Now, over the past few days, we've had an opportunity to go long on this pair as it broke through what was historical support, becoming resistance, pushing through that resistance in the 97.50 level, gave us an opportunity over the past 2 days to capture a few pips as it started moving higher towards the next resistance level, which is the orange zone. This will make much more sense as we get down here to the 4-hour time frame and take a look that over the past 2 days we've sat right there on top of that 97.50 level. Over the past couple of days we've had a couple of opportunities to take into buys right around 97.50, 97.55. Not an enormous amount of pips again. If you just take it from the 97.55 level, you can see we've seen a couple of shots at 25 to 30 pips of profit as it moved back higher. Hasn't reached all the way to our target level of the orange shaded area in the 9800 level, but again, rounding out this week, going into the long holiday weekend, I think it was good enough to go ahead and take the trades out with a decent amount of pips on the breakthrough of that resistance zone. As we go into next week, we'll be looking for one of two things. Either it continues to find support here on top of the 97.50 level, continuing to challenge the next resistance level at 9800, or we settle out into resistance at 9800 and start to move back lower. We'll be watching for either one of those opportunities at the first part of next week. Moving over to the EUR-USD, the euro versus the US dollar. Of course, same thing over here on the euro dollar. The ECB news a few weeks ago, the Fed news of last week, we saw the market move to the top of our longer term range. Take it out here to the weekly chart real quick. You can see this longer term range that we've been studying inside the red box going all the way back to the beginning of 2015. What's important about that is if you go back to the daily, you can see we reached right up there towards the top of that long-term range from the beginning of 2015, the top of the red box. Past several weeks, we've seen two challenges there in towards the mid to upper 1.1300s. Over the past 5 or 6 days, we've seen a pullback of that move that we saw over the past few weeks with the ECB and the Fed. A pretty decent pullback at that. Let's take it down to the 4-hour time frame. You can see really it's just been a slow fade, a slow fall all the way back down here into the mid 111s. Nothing really extraordinary to look forward to this week with trading opportunities, but going into next week, I think we have a clear opportunity to look for a breakout strategy here for this currency pair on the green shaded area. If early next week we see the breakout above 111.75, we'll look for the beginning phases of a move back to the 112s or even higher, pressuring all the way back up here into the upper 112s towards the 113 level. On the other side of this, if we start to see a move back underneath the 1155 level going into early next week, it could be the next signal for the next phase lower, going all the way back down here in towards the low 111s or even into the 110s for the euro dollar. And of course, a breakdown underneath the 110, 80, 85 level or so, take it back to the daily time frame. I think we're easily looking for it back down to the 1.1 level for the euro dollar. So definitely watching for a breakout of that green zone as we go early on into next week. Moving over here to the GBP USD, Greater British Pound versus the US dollar. Again, taking a long-term outlook here, we see the long-term downtrend that this currency pair has been in. Take it back to the daily time frame, zoom it in one time, and you can see the previous upward move on the left-hand side where the blue trend line is, breakdown, new low. Then we've been in this upward rising channel here for the past few weeks. We've broken through that. Now we're looking for the next move. If it continues to move in this direction, we might look for a challenge of the lowest lows down here into the upper 1.3800s, even a breakdown and a new low to be made. With that break outside that channel, we're looking for sales on rallies to resistance or breaks underneath support. Take it down to the 4-hour time frame. Over the past 2 days, in fact, just the last 2 days, we've had two opportunities to get in here on the pound dollar. We took our first opportunity yesterday here right around the 1.413540 level. We saw 30 to 40 pips of movement on that first entry as it fell back down off of there, taking it down 30 to 35 pips. Then, as the day wore on, it went back up, took us out at our break-even stop loss, giving us an opportunity to actually get into this much higher, closer towards the 4170 level. With that entry from yesterday, we saw the move about 50 to 55 pips. So a decent 50-55 pip moves on the second entry, 30 pip move on the first entry. A decent opportunity to take some pips out. If you're going to focus in on this pair early next week, I would say that this orange zone is going to be the key player here for us next week. Staying underneath here, we look for the continuation of the downside and selling resistance, targeting the support down here into the pink shaded area, and anything underneath that support will look for the continuation of the downward slide. On the other side of this, if it breaks above this orange zone early next week, 41.75, we could be looking for some upside reversal here for the pound dollar early next week. Taking it on over here to the USD CAD, I think we're starting to see some signs and indications of reversal here for this currency pair. Of course, for the while, we have been in the downtrend. That's along the red trend line. Quite a long time in a downtrend. The pattern we've been studying in the live trade room are those black boxes. Congestion, breakout lower, congestion, breakout lower, support, breakout lower. And it's continued to do that for the past several weeks. A little bit different over the past week or so. We see the rise is pushed above the red trend line. In fact, this time we see the push above one of those black boxes and above the resistance level. Could this be our first indications of a little bit of a short-term trend reversal? Could be back into the 3,500 level or even higher if it continues to move back in the other direction. We've also been keeping an eye on the oil prices. Of course, the inverse correlation with the US CAD is if oil prices are going down, we look for the US CAD to go up and vice versa. If oil prices are going up, we look for the US CAD to go down. So definitely watching oil prices with that, but I think we could be starting to see our first signs and indications of reversal. Haven't traded the US CAD this week, but definitely watching it for new opportunities going into the new week. Take it on over to the US yen. Of course, long term, we've been in a downtrend. However, over the past few weeks, we're basically going back to the beginning of February. We've been stuck in this range. The black box you see here on my chart at the bottom right-hand side. Resistance at 114. Support at 111. This week again, we saw the market challenge, or over the past week, we saw the market challenge 111, and we've just been on a slow rise back above there. Going down to the 4-hour time frame, over the past day or so, we've had opportunities to buy on the push back above the green zone, back above the 112.40 level, taking buys there, and even today, seeing targets here into the low 113. So a 70 to 75 pip move from yesterday even, 70 to 75 pip move, maybe even 80 pips depending on how closely you were monitoring the trade, 75 to 80 pip move from the green zone to the orange zone. By the way, last week, we saw the opportunity to take a short from the green shaded area. In fact, we saw an opportunity to take a short from the green zone all the way back down close to the blue zone, 50 to 60 pips on that first run from the green zone back down. But then once it broke above the green zone, all our opportunities were for buying and going long back above the resistance. So there was actually an opportunity to go short here, make some profit. Above here, we took a long and made some profit. So the yen has actually been a pretty decent opportunity this week to see nearly, if you took both of those opportunities, sell here or buy here, over 100 pips of profit on the US yen. Moving on over to the AUD USD, this currency pair could again be in the throes of trend reversal. We've been in an uptrend for quite a long time here for this currency pair. We've been looking at that over the past few weeks. We've capped out into resistance right near the 76.75 or so level. We saw congestion around the pink zone, 75.80, 7600. We've now pushed underneath there. Look over here on the left. We see a resistance high on the left, a resistance high in the middle or at the top. And any challenge back up there closer towards the upper 75, 75.80 or so could become an opportunity to go short once again here for the Australian dollar. Of course, we're also looking at support, a little bit of a higher support here in towards the mid to upper 7400s. In fact, if I was to take another trend line like this little red trend line, you can see connecting our last couple of lows. We're looking at this orange shaded area as a potential support. If you're looking for buying opportunities early on next week, that orange shaded area, close to 74.85, 74.65 will become your opportunity. We've already seen yesterday's support into there. Looking for it to head back up to the pink zone. For those traders looking to go short, looking for some reversal here for the Australian dollar, I think way back up there into the 75.80 level, the pink shaded area becomes your opportunity to go short. Or the next thing I suppose that you're looking for would be the breakdown of the mid 7400s and the continuation of the downtrend leg that we're starting to see develop here for the Australian dollar next week. Moving on to the NZD USD, we've been focused in on selling this currency pair all week long and really over the past couple of weeks, selling on rallies to resistance into the top of the range. I have it pretty well lined out here. The black box, of course, is the range. The red circle, top of the range resistance. Blue box, top of the range resistance. Green circle, top of the range resistance. As long as it's underneath there, and we'll call that 6,800, but it could be anywhere into the mid 68s as well. We're looking for sells on rallies into resistance and breakdowns of support. So that's been the main focus for us all week long. Take it, zooming in here, you can see the push underneath the pink shaded area just a few days ago. Pushing underneath that pink zone gave us an opportunity to go short underneath the 6740 level, pushing back down into the mid to upper 6600. So if you did that short underneath the pink shaded area, if you took that short, you're seeing 50, 60 pips of profit on the short underneath the pink shaded area. I think the same direction we'll focus in on early on in the next week. Rallies to the pink zone. We see the resistance over here on the left. If you just look along that level, you see resistance here. You see resistance here, you see resistance here. So we're going to continue to look for resistance into the pink shaded area and the turn lower for the New Zealand dollar. Fundamentally, it makes sense. Technically, it makes sense to sell from the top of the range. So a sell 67.40, 67.65 will still be our overall focus going into early next week, even down from the 66.75 level. Currently finding support over the past 3 days around 66.75, this little yellow shaded area. Anything underneath and a breakout underneath that support, again, our next targeted level will be the bottom of that orange shaded area back down into the 6600 level. The orange shaded area becomes your support. I don't think there's any real reason to take a long here right now. Fundamentally, it makes sense for this to go down. So I think we're going to continue to focus in on short, selling resistance. If you've still already taken that sell underneath here or even at the blue shaded area, you've seen